Hey everybody, today I'm going to talk about in the underwriting process of analyzing a particular real estate property that you're interested in purchasing as an investment. One metric of evaluating the performance of a particular property, a particular asset, is to look at the equity capitalization rate. Um, the equity capitalization rate pretty much calculates or does calculate the cash flow after all expenses for the particular property divided by your initial investment. So in this case, I've just done an Excel spreadsheet and have done formulas in this. So just a really easy, quick template as I'm underwriting particular properties that I'm interested in purchasing to add to my portfolio. I can plug in numbers really quick and go from there. So this is just as an example. This is a duplex, 2 bedroom, 1 bath. Monthly rent for each side is $900. I'm not going to get too much into these expenses: management, real estate taxes, insurance, utilities, repairs, and maintenance. Those are pretty typical expenses. But you can change. If you change monthly rent to 1900, that of course changes the various things within the field. So um, I love this. Excel is pretty easy to use in terms of doing this. But as I mentioned, today I'm focusing on a metric used by a lot of people. I use it um, as just a measurement of your return on your investment, the actual cash, your equity position in a deal. Equity cap rate is synonymous with cash on cash return. If you hear that term, they're interchangeable. Um, but as you can see, the calculation here, so I'm calculating, um, my NOI at 12,003. I'm assuming 20% down, kind of a conventional loan here, 20 years, 20-year amortization, 4.2% interest rate. Mortgage payment per month is 641, so annual debt service for this property is 7,692, leaving you a cash flow of $4,300 for this duplex. And as you're analyzing these deals, I did, if a property, this duplex is marketed right now for 135,000, but you feel like you can get it for 125,000, you can just change that field and it alters throughout these fields, which will in turn affect your cap rate, which will in turn um, affect the final numbers. So we'll change it back to what it was, and that gets you back here. So as you can see, the calculation for equity cap rate, this is a pretty strong equity cap rate. The money that you're receiving, how your money is working for you. Your initial cash investment into this property was $26,000. So with that particular investment, your cash flow is 4,300 and some change annually, which 16.58%. A question that I get a lot is, what's a good cash on cash return? What should I look for? And it really just depends on the investor's requirements and what they're wanting to do in their overall real estate portfolio plan. They might get a less riskier asset and they're willing to settle for lower cap rate as well as a lower equity cap rate. And also, you can kind of compare it to the financial market. So, what can a stock bring you per year? This is the same thing as a dividend rate, equity dividend rate for a stock. Um, but just a really good metric to use, one that I use, one of 5 or 6 things when I'm really diving into a property to learn more about it, to analyze it, how it can a metric in analyzing an investment property. Real quick, equity cap rate calculation is this probably looks like jargon if you're just getting started. Um, but you're taking the PGI, which is your potential gross income, minus your vacancy and collection loss, which gets you to your EGI, your effective gross income. From that point, you're taking all your operating expenses, um, and this is just a percentage. Your total expenses here, this percentage is a percentage of your EGI. So 8,516 divided by 20,520 will get you 41.5%, which sounds a little high, but anyway, so you get that after you subtract your EGI from your operating expenses from your EGI, you get your NOI, and of course your NOI minus your annual debt service um, gives you your cash flow, your annual pre-tax cash flow, and from that point, your income to the equity position, which is your annual pre-tax cash flow, divided by your initial cash investment. In this case, $26,000 gets you 16.58% annually equity cap rate. Hope this helps. Went through it pretty quick. Um, Talk to you guys soon. Thanks.